Recipes for technical trading success in Cook's Kitchen.
Time for another look at who's buying your stocks. Your favorite stocks, whether you're a trader or an investor. We're going to look at the institutions that are buying and selling because they are the ocean currents and trade winds that ultimately move your shares. And yes, the data is 50 to 100 days old, but it still tells you, what they're doing, where their head is at in terms of, is this a long-term investment they want to keep buying, or have they been reducing the position drastically? Today we're going to look at NVIDIA first, NVDA. Here I'm on the old NASDAQ.com. I've got the top 15 holders, and I can sort this by buyers and sellers. But one thing you look at right away, the default setting is top holders. So you've got the big guys here, Vanguard, Fidelity, BlackRock, State Street. And remember, these large institutions, they're going to have these massive positions. So if they own 25 million shares or 50 million shares, a million or two buy or sell isn't that big of a deal. And in a strong bull market, they're in natural accumulation mode anyway. So what you want to see is, for the most part, are they net buyers? So you can see here, we've got the change in shares. So it's nice to see for the top holders, who's buying, who's selling. Fidelity trimmed, 1.4 million from their, it was over 45 million shares. Vanguard, BlackRock, and State Street were all small buyers, small for them. Click on change shares, and then we can sort this immediately by who were the biggest buyers. Making sure I'm still looking at NVIDIA here. Yep. And what's great is to see, I like to see new positions. So under change percent, if it's a new position, you get that noticed here. So we've got some funds that I don't even know starting new positions in NVIDIA in Q4. Remember, this is Q4 data. What else stands out? Well, let's just go to the chart because then we can see, okay, let's look at the time span of Q4, which was October, November, December. And you can just roughly look at the 50-day moving average. Stock went from 180 and climbed up to 230, 240 by the end. So, steady buyers in here, and that's what drove it higher. So even on this big day in mid-November, enormous volume of 25 million shares, there were a lot of, even though that's a red volume candle, there were a lot of buyers there. So that was nice to see. We finally jumped back in NVIDIA on this dip into the 240s, and we look to be buyers again. This is just a temporary hiccup here. Okay, next we're going to look at your favorite space company, the only one that's public, and that's Virgin Galactic. Got some requests for this one, so I want to dive into it. So going to the Virgin Galactic NASDAQ institutional holdings page for SPCE, I'm defaulted here to the largest holders. So you've got Vanguard at the top with 5 million. That was a new position for them. Now, this new position for Vanguard of 5.2 million shares in Q4, this is symbolic of something that happened because if you understand how Virgin Galactic went public, it did not do an IPO. It merged with an existing sort of holding company, the guy Chamath Palihapitiya. I just messed up his name, but just call him Chamath. He was an early guy at Facebook, took his fortune and went elsewhere, and now he's just his own VC. So he had this little holding company called Social Capital Hedosofia, and he was friends with Richard Branson, and instead of doing an IPO, Richard Branson says, why don't we bring Virgin Galactic public by merging my ownership with Chamath, right? And Chamath owns like half the company. And so that created this new entity. So you're going to have somebody like Vanguard creating this big new position, probably buying from earlier investors. Look at all the new positions. So the new positions are indicative of this new entity with its own unique way of becoming a public company. And so if we look at the chart for SPCE, here you see this flat line for what was Social Capital, Head of Sophia. The merger's complete in late October. Looks like a few people took their money, and so this is where we probably had the buying from a Vanguard and a lot of other new folks, basically taking those new shares. And I don't know how many shares they created, but then it's been a steady march higher, and then just a mania, really. We had a Morgan Stanley analyst right here. You see this lift off here. That's the Morgan Stanley analyst saying, hey, this company could be worth 3 times what it's trading for now. So that gets you from $8 to $24, and now it's living above 30 here, which is just amazing. You see this enormous volume here. Okay, our next company is going to be, let's go back to NASDAQ.com. We're going to do Netflix. So a little me getting cute with the keyboard there. All right. While that's loading, let's look at a Netflix chart. We're going to be looking at who was buying October, November, December when shares were, let's call it 270 to up to finally the move back above 300, closed out the year at 330. So, average buying price, around 300 for the buyers in Netflix. And scroll down, left-hand menu here, institutional holdings already selected. So, again, sorted by the top holders. Capital Research, it's the big fund in Los Angeles, part of Capital World, or Capital Group, and Capital Research, Capital Global Investors. Big holders, they added 2 million shares. Let's see if there are any big sellers. Fidelity trimmed a little bit. Fidelity sold 1.6 million to get down to 20.5 million. T. Rowe Price was a big buyer. So let's sort by buyers, see who the smart money was. There we go. There's both Capital Research and Capital International, another entity, I believe, of Capital Group. What's great to see about Netflix is there's so much hate and negativity about Netflix, right? They're spending a ton, and TV is almost saturated now with new shows, and there's so much competition. So, how long can this model go on? Getting enough new subscribers and monetizing the whole thing when you're only charging people $10 a month or whatever. So, let's see who the bears were in Netflix. So I click on Change Shares, and we get Invesco dumping a big part of their position. Now, Invesco is usually something to do with the triple Qs, QQQ. So I need to investigate that and find out if, obviously Netflix is still in the QQQs, but maybe they just wanted to reduce the weighting. So that's a possibility. JP Morgan, a seller. We already saw Fidelity. So good stuff. We already looked at the price chart. Who are we going to go to next? Let's do Lulu, and then we'll do Disney. Lulu has been just on a tear. We'll get that price chart up too. Next week, check this out. I started a new podcast series on successful corporations and what you can model and unsuccessful corporations and what you shouldn't model in terms of running a business or running your life. And it's going to be a 3-part series. Next week, I'm going to bring one of our junior analysts, Ben Rains, on, and we're going to look at the success of Lululemon and the underwhelming of Under Armour and what has possibly been their execution mistakes at Under Armour versus the disciplined execution at Lulu. All right, so here's a chart of Lulu. We're going to find out who was buying in October, November, December, between 190 and stock got back, 2.25. So, averaging a little over $200. Steady buyers in Q4. Let's find out who they were. Scrolling down here, I am in Lulu. So top holders, of course, Fidelity, Vanguard, BlackRock, T. Rowe Price, Jennison, they're showing up in the top holders. Among them, Jennison trimmed a little bit, selling just over 1 million to get down to 8 million. BlackRock trimmed tiny, and T. Rowe Price was a huge buyer. T. Rowe Price is showing up in a lot of things here with big buys, and makes me think that they were helping somebody liquidate. Often, these large institutions, managing trillions, can be the block trade if a particular hedge fund or somebody is liquidating a position. Where can I sell 1 million shares? Where can I sell 5 million shares, for that matter? All right. So those are your top holders. Let's see who the biggest buyers were among them. Obviously, T. Rowe Price. WCM Investment. I don't know if that's Winston or Winton, but a big new buyer there, 3.3 million. Let's see who the sellers were. Advent said, I'm outie, selling all 2.6 million shares. And again, Jennison trimmed a little bit. Invesco, could be the QQQs, had to trim a little bit. This is Lululemon. Correct me if I said Netflix again, but we're looking at Lulu. And Lulu is in the QQQs, so keep that in mind. You've got some retail in there. All right, we looked at the Lulu chart. Who's up now? Let's do Disney. Now, Disney's in the news, obviously, today. I'm recording this on Wednesday, the 26th. You may not be seeing this until later in the week, but Iger stepping down or stepping back, right? That's the good news, right? Because he's been the architect of a renaissance for Disney in terms of film, the studio, and then content and launching Disney Plus. He's the brains behind that. I'm sure he has some help, but the first fear was, is he gone? No, he's just going to step back and focus on content, and he's bringing in the guy who's managed the theme parks for forever. I think he's been there like 27 years. He'll be CEO, and obviously he's probably got the expertise, but he's going to be in the spotlight with theme parks and what else? Cruise lines, hotels, those kinds of things being affected by the coronavirus outbreak, and having to shut down a theme park. What else about Iger? Well, look what Iger did. This is why the guy is got the Midas touch for Disney, because he buys Marvel rights and reinvents that franchise. Pixar, which was kind of a no-brainer, but he still had to spend $7.5 billion on it. And then he picks up Star Wars for $4 billion, and he just has these long-term winning entertainment franchises, that will, continue to be an annuity for that firm. But back to the theme parks, and I think the guy's name is Bob Chapek. That's the bigger segment of the company. It's bigger than the studios, like $7.5 billion in revenue, which is more than double the studios. So that's how big this theme park is. So you're seeing the stock down. Let's take a quick look at the stock, and then we'll see who is buying and selling. Diz. Okay, so after the big run up in Q4 to new highs above 150, trading below 124, 125 now. They're selling it today. And so October, November D's, this was the big pop in November once Disney Plus launched, right? And it was a huge success, and looks to is it going to clobber Netflix? Is the question. Man, I would be interested in looking at buying some Disney near 120. I think this is just, we won't get to see until mid-April who was selling. Now let's find out who was buying Disney in Q4. All right, Diz. So Vanguard, BlackRock, State Street, Fidelity. Look at Vanguard. They've got 135 million shares. BlackRock, 112 million. So the little things they do don't matter. they've been in long-term accumulation mode. It'll be interesting to see if any of these big guys are big sellers in Q1, and we could know that from an amended 13D or G soon. All right, let's see who the pure buyers were. Let's just stack those up. So Johansson Financial Advisors, that's almost a new position of 3.9 million shares. A couple other smaller names, so decent buyers. Let's see the big sellers. Morgan Stanley shows up as a pretty big seller, 6.8 million shares. So they sold into strength, and hopefully they sold after after the big pop on Disney Plus. If you sold into this after Disney Plus launched and you saw the subscriber growth rate, you did very well. All right, we looked at Netflix. We looked at Lulu. I want to do. I talked about Under Armour. I want to do Roku and GW Pharma. So GW Pharma is the only FDA-approved cannabis drug, cannabis-derived. So the FDA, and this company has been at it for over 20 years, founded in the UK in 1998. The two founders, that's what they set out to do entirely, was cannabis research for pharma. They got an MS drug approved in the UK in 2010, and then last year the FDA approved Epidiolex for the treatment of two rare forms of childhood epilepsy. And the sales have just launched. The sales growth, so they just reported 104 million in sales. Last night they reported for the last quarter. It's on its way to probably doing 600 million this year, and it'll be $1 billion drug in no time. And they've got a pipeline. They're working on other things where cannabis can be the basis for a pharmaceutical. All right, so GW. Here's your biggest holders. Guys in the West Coast, Capital Research. They were tiny buyers. A lot of buyers here, yeah, in the top holders. That's nice to see. So you're looking at top holders and net buying overall among the guys who already own, which is nice to see. Let's see who the biggest buyers were. M&G Investments, new position, a couple of new positions there. Nice to see. Where was the stock back then? Pardon the ads here. I just like to use stock charts because it's so quick. So here's GW. It's had a bit of a rocky time here. Sales for the new drug aren't growing as fast as everybody thought. 50 to 75% sales growth is, I guess, not good enough for some folks. We've been buyers here around this 110 level and continue to be, like it longer term. All right. Let's do some Roku. And then we'll be done. Last one. Yeah. All right, Roku's loading up here. This is another stock that's kind of hated because, if you have to think about what's your thesis for owning Roku or not, it's a device. Yeah, they're built into the TVs, but could that technology be easily replaced? Comcast launched their own box and is giving it away for free. So, does Roku have a platform that continues to grow revenue the way it has? That's the question, and the innovation sort of event horizon for them. All right, so here's Roku, top holders, big guys, of course, at the top. Fidelity was adding in Q4. We'll look at the chart in a minute. Let's see who the biggest buyers were. Well, Fidelity, of course, not percentage-wise. It's a 43% increase in their position. That's pretty substantial. So you got a fund manager at Fidelity who probably really likes it. And Wellington, big Boston group. ARK Invest. So ARK, we've talked about them a lot as big bulls on Tesla, bulls on NVDA, the genetic testing company, NVDA. So interesting to see them here as big fans of Roku in the streaming wars. And let's see who the sellers were of the Roku. Whale Rock Capital Management sold out, and Morgan Stanley trimmed 20% to get down under 4.5 million. Lord Abbott sold out. Let's see Roku. Roku's another one that's been on a wild ride and bearish. I mean, if you're a pure technical trader, I just messed that one up. You've been a seller of Roku for some time. This was the earnings pop, right? That was a little bit of relief to help people out on good news, and just continues to sink here. So I think anybody who's short is staying short. So here's October, November, December. Stock launched from 100, gets all the way up to 165 in November, and then this new downtrend starts. I forgot what this news here was, opening up December. That because that wasn't it could have been earnings. Yeah. All right. Good stuff. Thanks for joining me in the kitchen, and I'll have an article version of this linked on YouTube. The article version will be on Zacks.com. I'll put the link on YouTube. And feel free to send me comments and stock symbols for your favorite stocks that you want to see. Show you how to use NASDAQ.com website for this. And always try and bring a little bit of extra color about each company and what's going on fundamentally and technically. All right, see you next time in the kitchen.